Welcome traders to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to share with you some of our trading plans for the week. In this video we're going to check the euro, the S&P and gold with specific setups for the week. So let's start. Here we have the euro against the dollar, and this week we are looking for a bullish setup. After this strong move up last week, we have a big corrective wave which today started to reject, as we can see. The first step this week on the euro is having the completion of our impulse back to the previous high. Once we're there, and this is a special for scalpers, for day traders, this cycle here, we're going to look for the 3-wave sequence down, which the swing trade is going to come here. So after we have a successful 5-wave sequence, yet still under construction, but once we have it, then the next step is to focus on finding the end of the second wave. Finding the end of the second wave is something, or any wave, or any corrective wave, is something that you need to master. We have a special system where you don't need to become an expert on Fibonacci levels or that type of thing that clearly is not going to work, right? If I fill out my chart here with Fibonacci levels, with a lot of lines, of course, eventually, if the second wave is going to finish on one of those levels, of course, it's going to happen. But that's a distraction. That's something that is not going to give you any value, because the reality is that the second wave can finish at any of those levels. So instead of wasting your time checking those levels, you just need to have a good pattern. And that's the pattern that we work all the time in Elliott Wave Street. We wait for an ABC, A, B, and C. And at the rejection, we start buying at this area. So no matter the shape, how deep the second wave is going to be, we don't care. We look for the setup and we start trading the setup in a simple and easy way. In the Elliott Wave Street membership, we cover a lot of examples every day, Monday through Friday, on different markets. Of course, on the live markets. So this is a good setup. Let's have a look at the S&P. On the S&P, I'm bullish. I'm looking for a fresh high probably this week. By the end of the week, we are likely to be getting closer or getting at the previous high. Let me ask you something. If you are trading anything, you are going to look for a discount, right? If price was here and you want to trade that asset, you're going to look for a discount. You want to have a discounted price. You're not going to buy here the most expensive price that you have been seeing on the last weeks or months, right? You want to wait for a discount. And that's the discount that we're seeing on the S&P. The price before was here, now is here. So it's a great place to develop a bullish narrative. Here we have a beautiful rejection, which the price is building the first impulse. Today, this morning, with our clients, we were planning here the bullish move. And that's something that you can get access in the membership, the real-time markets. Now that we have this beautiful move up today, the next step is that once we have the completion of our impulse, we can look for the second wave. And actually, this impulse can be smaller. It doesn't matter. Let's suppose that that's the wave 3, that here comes the wave 4, and here will come the wave 5 black, and here we have the ABC. It can develop like that. There are different shapes, but we need to learn to find out the one that we're going to trade. So imagine trading here, let's say tomorrow, that we have a sell-off overnight, that we have the price building the wave 5, and then we have the possibility of adding to the position after the second wave. One of the key things that we need to understand in the trading business is that as traders, we risk 1% of the account per trade or less. So we have a small risk. And if we are able to catch a home run, we can grab a good amount of points. So clearly that's excellent, because if we have a big move up, then we can just have the completion of the move. We can just have to capture a good amount of points. So that's excellent, right? Because we risk 1% and we can make 10% on a trade. When things don't work as expected, we have a small loss. When things work as expected, we have a good win. And that's it. And everything else is understanding supply, demand, and building strategies around that concept. So this is a great setup that we are following this week. Finally, gold is also setting up a beautiful trade. Because look, here we have a rejection. So this is entry number 1. Here we have a second rejection. This is our entry number 2. Always using a small stop loss. That's another key aspect. Never use a huge stop loss. Work on your executions. Get better at your executions. But never buy here and set a stop loss here. That's crazy. You need a lot of points to get to the 1-to-1 risk-reward ratio. Nope. So if we go long at this area, we can leave a protective stop loss under the low. We can target this high at least, or the 1-to-1 risk-reward ratio, and there we can book some partial profits. Never in your life let a 1-to-1 winner trade become a loser. When the trade is able to reach the 1-to-1 risk-reward, just book partial profits. Take out 50% or tie to your stop loss or whatever. Personally, I like to book partial profits. Take out 50% out of the trade. But of course, you can adjust the strategy with your preference. There are different personalities. So the point is that something that we should always apply is that when a trade reaches the 1-to-1 risk-reward ratio, we need to book partial profits. Traders, if you want to get the full analysis on these instruments and more, here at ElliottWaveStreet.com, under the membership tab, you are going to find our plans. We have the Forex, the stocks, or the full access. We're having a special offer of $19 the first month and then $75 per month. So you can pick your plan, read everything in this page. If you have any question, let us know. And you will get immediate access to this fantastic Elliott Wave Street world, where you are going to get the live market analysis, education, and more. And you're going to change your trading forever, because this is techniques. These techniques are institutional techniques. We read the institutional cycles. We read the big guy, and we combine this with momentum, with price action, and we also combine this with the big guy concepts and supply and demand. So traders, please have a fantastic start of your week. I'll see you inside the Elliott Wave Street membership. Take care. Bye-bye.